Rohr here with an early concise highlight on Monday, May 4th, 2015. It's currently 7 a.m. U.S. Central Time, and we want to concentrate on what is essentially still weak data, but ultimately equities have rallied and the sentiment elsewhere is a bit stronger, and there was a weekend extensive perspective on tail risk being back. If you haven't already taken a look at that post from Saturday, we suggest you do so. So, what has all that meant to the market so far? Well, we, as usual, have the S&P 500 60-minute chart on the left, 30-minute on the right, and for now, the S&P 500 that rebounded so smartly on Friday from Thursday's debacle that took it all the way back down to retest and even slip a bit below 2075 to 78 is up 6 today at about 2108. Now this is very important in its way because it is back above a down break below the 2097 level. That's also a key Fibonacci area, and we'll have to keep an eye on that on the way back down if it comes under pressure. But it's also getting back up toward the one key topping indication, which goes back to actually last Monday on the 27th, when it made a new high heading up from the previous Friday's close at 2111.70, but ended up, after only making a new all-time high by a couple of dollars above 2117 area, it ended up lower on the day. That was a reversal from what we're calling the 2112 area. And on Tuesday's recovery got right to 2112 before it was really hit by that very much weaker than expected on already weak estimates U.S. GDP number. And so we're dealing with where the market's above 2112 and 2119, and if it does, the oscillator resistance above the market would be up in around the 2125 to 30 area now. So this is very important activity with the typical lower supports now amended from 2100 to 2097, and again of course back into the 2090 to 88 area, which you can see was important both on the way up as resistance, on the way down holding, and then of course when they got below it going back out into Thursday, it was very important once again. So we'll be keeping an eye on all of that. And that pretty much does it for the short-term view of the S&P 500.